Hi guys, Harry Otis here, professional trader for 20 years. Started my career in 2005 and still alive in 2026. Specifically today, April 27th, 2026. This candle right here on a chart of the S&P 500, slowly drifting upwards. Okay, the theme of the day is bullish yet vulnerable. Okay, bullish, clearly bullish, but yet vulnerable. Why? We'll talk about that during the main event. But first, we always talk about the technical picture. We don't have to go even further. We know it's bullish. We don't have to bring in any moving averages. This thing is bullish, finishing at new highs today in the beginning of the last week of April. Okay, so April has been on fire. Okay, so that's the technical picture is bullish. The sentiment, we always pair it with the sentiment. Still in greed. We went from 66 to 67, ticking up. Everything is pretty greed. Neutral, everything is coming back slowly. The put call options are neutral. See, a lot of people started buying puts. This is very, very bullish. Okay, they're not super maxed out at the highs. Pretty cool. Okay, so it just adds to the bullishness of this entire picture. Okay, and we also had, remember the AAII Investor Sentiment Survey? This is the first week of really bullishness. Okay, so it's very, very new beginning. The bullishness is starting. Okay, so that's what I wanted to bring up. But so let's get to the bullish and vulnerable theme of today. What do I mean by that? Okay, on multiple fronts. First of all, just technically speaking, if you see here, when you see a slow drift up like that, and on the bottom here is the volume decreasing while it's drifting higher, that's very vulnerable to a pullback. Okay, mind you, I don't mind the pullback as a bull. I want the pullback. It'll probably be very healthy for the future and continuing to go even higher. Okay, and it'll probably recycle these bulls back down and bring in the bears because, like we said, this is just the first week of bullishness. It hasn't been solid yet, solidified yet. Okay, so we have this move. We also have, look at this. It's let's just put it here, a technical indicator that is a rising wedge, if you will. Forgive my drawing, but when you have a rising wedge on low volume and it breaks the downside, it usually continues, okay? Breaks to the upside, it's going to probably go up. I don't think that's the case, but we are, technically speaking, at a point where we're like trying to squeeze out the last blood from this onion, if you will. I don't know what the expression is, but we're trying to squeeze out the juice from the orange, okay? So I'll just get rid of these for now. That's a technical issue that I don't like. It's like slowly drifting away, drifting upward, vulnerable to a pullback, okay? We have the news today. It's all about the war. The news is Trump discussed Iran's Hormuz Strait proposal with top aides, okay? Now, this is where you get the vulnerable mixed in with a bullish. So we have the bullish and the vulnerable. We mentioned it before with a technical picture, rising wedge. But now it's Iran offered, let's not sign up. Iran offered to reopen the Strait of Hormuz if the U.S. lifts its blockade and the war ends, while setting aside nuclear negotiations for later. This is a big move. I would take it. Sounds very, very reasonable. We can talk about the nuclear stuff later, but at least let's end the war and lift the blockade. That'll be very, very good for the markets. And the White House confirmed that Trump received this plan. However, Trump, we saw over the weekend, he canceled plans for his son-in-law, Jared Kushner, and Steve Witkoff to meet with the Iranian counterparts. That's the negative. And Secretary of State Rubio, who's a war hawk, appears to pour cold water on any Iranian proposal to clear the strategically vital strait. So you have pluses and minuses here. Very good deal here, but I guess the insiders of Trump don't want to accept it. So this is why we have oil today up. It's muted, but it's up like $1.67 a barrel. Okay, it's still up. So it's trying to form that second shoulder that we were talking about. I'm trying to go short. I'm trying to get more shorts to come in. I'm trying to be a little bit greedy because, okay, having said this, I think the shoulder comes in. However, for SPY, I believe that we're coming to the end of the month, so we usually have window dressing. So the last 3 days of the month are usually bid. So we might just sort of hover at the highs, slowly drifting higher again up until the end of the month and maybe the beginning of the new month, like money starts coming in from like passive investors. So you're going to have a passive bid in the market coming up this week. So that's why I think it goes up. But I don't think it's going to be major, barring some, of course, war news. I just think nothing happens in the war. They just sort of like kick it down the curve, trying to make some appeals here and there, some concessions here and there. So I don't see a big move. So that's why I think we're still going to drift higher, but we are vulnerable to a down move after this, support, this nascent support starts like bubbling away, disappearing. So that's what I wanted to mention. Okay, and another number 3, and then the last segment of the vulnerability is this. We talked about the semiconductors. This is the SMH. Okay, it's Van Eck Semiconductor ETF. Look at this. This is parabolic. Cut to new highs, and this is a leading sector. We mentioned before. That's why in one of our past videos, we recommended NVDA when it was here. Okay, and we did I think it was a 195, 205 or call spread. So we realized the 10, and it was done for almost flat to maybe a slight credit, because we also sold the 170 put. So we sold the 170 put to finance the 195, 205 call spread. You could have gotten it for a credit, or you could have done it for 0, and now you would have realized a 10 spread. If I was anybody who did that trade, I can't give you financial advice, but you should be out of it by now. You probably realize at least 75% of the max gain. So yeah, I would take it out. So this trade would be very, very good. But what I'm saying is that the semiconductors are so up. Everything is like a super extreme. The RSI here is very, very high. It could still drift like everything else. Okay, this is a leader, but if this is basically the semiconductors are leading this entire market, everything else is sort of muted. Nothing really big happening. So everybody's piling onto the semiconductor space. That's what makes it vulnerable. Okay, so I don't think it just collapses, but it's vulnerable for a pullback, because I am still bullish. We are still net long in our positioning. Okay. So that's what I wanted to bring up with you guys. And the last thing that I want to mention is the VIX. Still at 18. So still relatively high. Between 15 and 20 is technical, it's a technical sweet spot, meaning that it's a neutral, it's not super low vol, so you can still do options type strategies on the sell side. However, it's getting a bit long in the tooth. If the market starts drifting up and this starts drifting all the way below, I really do not want to take any a short premium type strategies when it goes below 15. Okay, so we could get there in 2-3 days, right? So which means it's vulnerable to another kind of spike, one of these little mini spike up that happened this whole time here while being muted. Okay, so that's what I think we're vulnerable at. All things point to that there is bullishness, but short term I think vulnerability setting up for a move down before we can have another buyable opportunity. Okay, so that's what I think, guys. Looks like going forward to the end of the month, window dressing in effect. So we probably drift higher, lower volume. So, expect a pullback. Maybe not a big one, maybe just hovers this week, but it's going to come soon. And that's when you'll be ready to pull the trigger, have some cash ready to pull the trigger to go long, right? That's it, guys. Later.